Hello and welcome to the Bitcoin Butlers podcast. I am Mike Watkins, and with me, as always, my good friend and business partner, Matt Burke.
Hello.
And each week, we try and bring you an intellectually honest discussion about news and events affecting Bitcoin. If you like our content, please like, subscribe, and share. So, this week, we had a really seismic event happen in the world of crypto, and that is what looks like the eventual collapse of the second largest exchange in the world, FTX. So, Matt, if you don't mind, start us off with the details essentially of what happened here.
Yeah. So early last week, we started to hear some rumblings that FTX was facing some liquidity issues. The problem was that they had a tremendous amount of FTT tokens, which was basically their own native utility token that was being used within their ecosystem, that was also owned heavily by their trading arm, Alameda Capital. And we saw that token uh, lose value and uh, basically created a spiral for FTX that caused them to stop allowing withdrawals for their customers. And as that began to play out, we saw that there's what appears to be a multi-billion-dollar hole in their balance sheet, given the amount of assets that they had on their books compared to what their deposits were with their customers. So it looks like they are going belly up, and they are just, a huge player in this space that has done a tremendous amount um, of fundraising and advertising. They, had the FTX Arena named after them in Miami. They've raised a couple $1 billion worth of investments at tens of billions of dollars of valuation, as high as I think 32 billion, as far as the valuations that their investors came in at. So what we're basically seeing is something that's really on a bigger scale than we've seen in any other kind of crypto blow up over the past several years.
Would you describe this as, I mean, some of the terms I've seen are Ponzi scheme. Would you describe this as a Ponzi scheme?
I would describe it as worse than a Ponzi scheme,
Mhm.
because in this case, it was a Ponzi scheme that was on so many levels that you had um, the creation and the issuance and the rehypothecation of a digital token that was then also being used as collateral for loans that were unable to be repaid. And at the same time, you had markets being manipulated to the point where there was really no way for them to get out from under that kind of, negative equity um, that was created, because they just had so much. They were just insolvent to the point where they had created a currency out of thin air that turned out to be worthless.
Mhm.
So by that definition, if you think of it as a traditional Ponzi pyramid scheme where basically somebody gets left holding the bag at the end.
Mhm.
In this case, you had that, and then on top of it, you had an enormous um, cryptocurrency exchange that was built on top of this Ponzi.
Mhm. So one of the things that I think is important for people to understand, because the story is a bit confusing and the facts seem to be changing and shifting. Like we're only getting exposure to the real facts, and we don't even know if what we know so far is that accurate. But we do know a couple of things that are accurate, which is that one, FTX had this token called FTT,
Hmm.
and that token was just a made up was a made up coin. And what they did, and these numbers are not accurate. I'm just trying to use them for illustrative purposes. Let's say they they printed or they created a billion of these tokens, And then they said, okay, well, we just created, let's just call it a billion little digital pieces of digital something that cost us no money to create. And then we are going to sell. It's like let's call it a virtual baseball card because I think that'd be easier for people to maybe conceptualize. We create these virtual baseball cards and we just print them just like there'd be a JPEG or any other image you'd have on your computer. And we're going to assign a value to these virtual cards. And what they did was they would use their trading arm. This is all allegedly for this whole episode. Everything is
Sure.
allegedly. So they would allegedly use their trading arm to say, all right, we're going to list this token for sale. And we're going to assign a value of $5 to this token. And we're going to get, we'll buy it ourselves. We'll put something out on the internet. We'll tweet something about it. People will buy this token. Well, all of a sudden, we have a billion of these on our balance sheet. And now the market has assigned a value to each one of these tokens or virtual baseball cards of $5, which means that we now are worth $5 billion. And I'd like for our listeners to kind of conceptualize that. Like, imagine if you could just create essentially an unlimited number of something on your computer. You don't even have to do anything. And then get a market to say that something is worth X, and then you multiply X by the number of things you have, and it gives you this valuation. And that's really what happened here. They had this token called FTT, and no one in the world used this FTT token. It was only basically used by FTX and their sister company Alameda, which we'll get into in a bit. And they just assigned a value to it, or they kind of manipulated the market to give it a certain value.
Right. And this is a kind of a standard play with a lot of these altcoins, is that you create a large number of these tokens, and let's say there's a billion of the tokens, and they will offer, you know,
They'll
some
put up on the
fraction
open
of
market,
that.
right?
Well,
Mhm.
but it's some fraction of that billion. So maybe there's, if there's a billion tokens out there, there's 100 million that they offer to the general public, and the other 900 million they're holding. So now you've got 100 million tokens out there at X price that are worth something. But when you multiply that 100 million at X price, times a billion, now those tokens that they're holding are worth a tremendous amount more for themselves. And
Mm.
where it gets really squirrely is that they then took those tokens that they were holding and used them as collateral for loans on the other side.
Right. So they took their fake thing that they just created on their computer and assigned a value to. They took that and said, hey, we're worth, and for this example, we're just going to use $5 each times a billion, so 5 billion. And then we go to bank, say, look, we have 5 billion in assets. How about you lend us 100 million in US dollars? And investors lent them money based on this valuation, even though it was completely fictional. It's just made
They
up.
printed it out of thin air,
Yeah, they just
literally.
created it. And one of the things I thought was really interesting, and we're going to kind of get into how did this happen. Well, let's get into some of the things that we think are weird about it. Well, let's talk about first. I'm sorry, how this death spiral happened. So, one of the few holders of the FTT token is Binance. Binance is the world's largest exchange. CEO of Binance is a gentleman by the name of CZ. And he goes on Twitter, I think it was like November 7, November 6, somewhere around
Mm-hmm.
there, and says, we are going to get rid, over the next few months, we're going to get rid of our FTT token. And basically announces to the world that they're going to sell this off, which is, I mean, if you want to sell it off and maximize your value, you would never publicize it to the world. You would just sell it and get out of it for the highest amount. When you publicize it to the world that you're going to dump it, then it gives others the opportunity to get in there and dump it also. So
And for shorts to take advantage of it because they know it's going down in value.
Yeah, some shorts made a lot of money on this, a whole lot. But anyway, this whole thing starts to spiral, and the scheme, the Ponzi scheme, whatever you want to call it, just starts to unravel, just like they always do. And within a few days, um, a lot of data comes out, and it looks like FTX. Well, FTX has filed Chapter 11 already. I don't think we need to
Well,
get into too many of the other details. Do you?
yeah. Well, in the interim, the other interesting thing with Binance is that at one point they said, "Well,
Hmm.
we're going to buy FTX in order to stop it from going bankrupt." And once they started, the very first level of due diligence to explore that transaction, they very quickly said, "Well, wait a second. There's a hole in this balance sheet. We don't like it. We don't understand why it looks like this. So deal is off. We're no longer looking to acquire FTX." So that happened pretty quickly, and then separately, when Binance, said that they were going to, or when CZ said he was going to go out and sell his FTT holdings, Alameda, who's the trading arm of FTX, kind of said, "Whoa, wait a second. Well, we'll buy them from you at $22 a coin," which it was basically um, there was some technical support level there to begin with, and then it was also that was a point at which if it didn't go below that, then they could still maintain their collateral without facing a margin call from their
Hmm.
lenders.
Hmm. Yeah, I mean, yes. Looking into this, though, I think that the details of the story for what happened, there's lots out there. I'm going to see kind of how it plays out. But when you kind of take a look at this from 30,000 feet, we can see that the actors in here were not particularly skilled. The trading arm, which was a sister company of FTX called Alameda, was actually, I believe, the CEO of FTX is Sam Bankman-Fried,
SBF, yeah.
SBF, and his girlfriend was the CEO of Alameda. And
Caroline, yeah.
right, and while they were technically separate entities, they really weren't separate entities. They were working together if in this scheme. But, one of the things I'd like to get into is, which I think is really interesting, is how did so many sophisticated investors get fooled here? And I think one of the things we should use as a reference is the Madoff scandal,
Hmm.
because, there were a lot of sophisticated investors that got fooled by Bernie Madoff. And to me, I was always very puzzled by that. And I actually know your father-in-law, who's an accountant, had a client come to him and say, "Hey, I'm thinking about investing, with this." And your father-in-law, I think, looked at it for like 60 seconds, said, "Don't go near this. This is garbage."
Yeah,
And with all due respect to your father-in-law, he's not like some super genius with some kind of crazy ability that
yeah,
he was able to see this and other
sure.
people couldn't.
No,
He's
I
just
mean
an accountant.
right. He's a
Mhm.
totally competent CPA and financial planner, and
Right.
it took him, all of a couple of minutes to look at this and say, "Wait a second, if something seems too good to be true, then it probably is."
Mhm. And and I think the same thing with FTX. And when I first started getting into this space, there was this thing where you can, you hold on to this coin and they'll pay you 16% interest a year.
Hmm.
And my question is, well, how? How's that? How do you do that? Like that doesn't make any sense. And I remember when I first heard about it, I had lunch with a friend. He was telling me about it. I came home, I watched a few YouTube videos, and by the end of like the second video, I realized, okay, this is just nonsense. Like this isn't a real thing. It's just pure speculation, and these things cannot continue. And there were things paying 1,000% interest a year. There's some really crazy stuff out there.
Yeah.
But one of the questions that I have, and this is a question I pose to you, is they raised in their Series B $900 million.
Yeah, at
with
an
a
$18 billion valuation. So they sold 5% of the company for almost $1 billion.
right. And the investors were SoftBank, Sequoia Capital, Coinbase Ventures, Paul Tudor Jones family. So really sophisticated investors. Like SoftBank and Sequoia Capital are two of the largest, most sophisticated hedge funds in the world. So, how did these people? What is your guess on how these people were fooled?
Well, I think there's a number of aspects to it. I think part of it is like, let's take Sequoia for example. Sequoia is an enormous investor in many different businesses, many wildly successful businesses, and I think they put like $200 million into it. So on one hand, you could say that an investment like that for Sequoia, we don't know what kind of prompted them to make that investment or who kind of whispered in their ear, hey, you need to make this investment. Um, but to be fair, a $200 million investment for them is somewhat of a rounding error in their portfolio. It's not like they were risking everything by putting $200 million into it. But the part that I can't really understand is that it seems that it would take just a precursory review of their balance sheet or the balance sheets of the related companies to understand that maybe this wasn't really above board. And I mean, even to the point where I believe at one point fairly early on, when the FTT token was being held in large part by Alameda, they had more
Mhm,
FTT in dollars on their balance sheet than the entire market cap of FTT. So even though they didn't own 100% of the tokens, they had 100% plus something of the value of that token on their
mhm,
balance sheet. So, you know, that to me seems that like there's definitely questions to be asked as to why they made that investment, and did they just do it, was it done because there was some level of I don't want to call it nepotism, but that there was that somebody knew somebody that said, hey, you should invest in this, and they said, fine, we'll do it, and they just checked whatever boxes they needed to do it. I don't know, but it seems like there's a pretty astounding lack of due diligence that was done by these investment companies that put money into Alameda at high valuations.
mhm. I find this to be one of the biggest question marks that I have when looking at the story because I believe that if they went to a bank and they were doing, according to them, they did, I think about 400 million in revenue in 2021,
Mhm.
and let's just say they did. So if I went to a bank and my company is doing 400 million revenue, and I asked that bank to lend me, I'm just gonna say $1 million, right? So a small fraction of what they're doing in sales. I don't believe that any bank I've ever worked with would not have sniffed this out and said no chance. Just when they looked at their balance sheet.
Yeah, and to be fair, that Sequoia or SoftBank or BlackRock or any of these they're not banks. They're alternative investors. They're not looking at it the same way that banks do. They're not regulated the same way that banks are. But at the same time, due diligence is due diligence, and it doesn't take a level of super genius to look at a balance sheet and understand that if you've got an asset on your balance sheet that's worth more than the total market cap of that asset, then something might be wrong.
Mhm. Now they said that 60 investors participated in the Series B. And I can understand if you get it past, let's just say you get it past Sequoia for whatever reason, like the a good friend of someone at Sequoia was involved with this, said, look, this thing is great. This guy, SBF's a genius. Put a little bit in there. I get it if it gets past one. How did it get past the other 59?
Yeah. Don't know.
That's a weird mystery. And I don't know if we're ever gonna find that answer. I just find that to be particularly peculiar that all of these sophisticated investors got in there. I mean, we're talking about raise $900 million is an enormous raise.
Huge.
Huge, huge. And you're talking about they did this. This is like for like a 1-year-old, 2-year-old company that did
Right.
this.
And at the same time, the company's got an arena named after them in Miami. They've got huge celebrities, huge athletes, Tom Brady and
Mm-hmm.
Steph Curry,
Mm-hmm.
all, endorsing this exchange. So, you know, serious notoriety in terms of the people that are endorsing this. And so, it it really begs the question as to what was going on and
Mm-hmm.
how are they able to convince all of these people who really had no business believing in it to believe in it?
Mm-hmm. And FTX was based in the Bahamas. So it's like
Yep.
it's kind of suspicious to begin with that, Coinbase is based in the US. They're regulated. I don't know much about the regulation, that kind of
Yeah,
stuff.
and to be fair, FTX has a U or had, I don't know if
Sure.
it's has or had a US arm that was regulated,
Mhm.
but that's going bust too.
Oh,
But
sure.
they were certainly um, looking for jurisdictions that would be friendly
Mhm.
to what they were doing and keep the regulatory eyes from prying under the hood.
I'm just saying, if I were to come to you with an investment, I said, "Matt, you gotta invest in this. I found this company. I think it's a great investment." And you say, "What do they do?" I say, "Oh, it's crypto trading." And you say, "All right, where are they based?" I said, "Based in Bahamas." Well, that's a red flag right there.
Sure.
So So I think that's puzzling, but I also I think our show really focuses on Bitcoin and Bitcoin adoption, and I think that the discussion I'd like to have is how does this affect Bitcoin and Bitcoin's adoption? And so I'll ask you that question. How do you think this affects Bitcoin? That's the first part of the question. And then how do you think this affects Bitcoin's adoption?
So in the short term, it's been bad for Bitcoin in terms of the price of Bitcoin. We saw
Mhm.
it go from Bitcoin was actually on a little bit of a run before all of this went
Mhm.
down. I think it was over 21,000 and flirting with 22,000, and the next thing we know, it's in the 16,000 range.
Mhm.
So it took a bit of a dive when all of this
Mhm.
happened, just because of the general crypto market, and so that was that's one obvious
Mhm.
impact it had on Bitcoin in terms of its market value. But my view is that long term, this is actually good for Bitcoin. Which we say this quite often. There are very few things that we've seen um, that aren't good for Bitcoin.
Mhm.
And what this tells me is that when you continue to promote these kind of crypto tokens that are printed out of thin air, that have no real value, no real utility, that are can be manipulated by market makers, and in this case manipulated in a way where you can have a pretty convoluted web of legal entities owning these assets and moving them between themselves. um, you can't do that with Bitcoin.
Mhm.
With Bitcoin, it's you have the keys to that Bitcoin or you don't have anything.
Mhm.
And what we're seeing here is just, further proof that it's really important for people to understand that the beauty of Bitcoin is that you can hold it in your own custody, where nobody else has the ability to take it from you, where it can't get wiped away because somebody else has rehypothecated it or treated it as collateral for some loan that you don't know about. Um, and really, the biggest thing that comes out of it for me is this is further proof that there is no reason to have any asset, especially Bitcoin, sitting on an exchange. And if when FTX filed their bankruptcy, they listed zero Bitcoin on their
Mhm.
balance sheet. and 1.4 billion, I believe, worth of Bitcoin liabilities, meaning deposits that people had made in Bitcoin that had zero Bitcoin behind
Mhm.
it. And that to me is the biggest takeaway, is that if an exchange can do that with your Bitcoin, you've given them that Bitcoin. They're holding it. You think they owe it to you, but when they go belly up, they may owe it to you, but they don't have the Bitcoin to back it. So the only way to protect yourself from that is to get the Bitcoin off of the exchange and hold it securely in your own custody where nobody else other than you can control it.
Exactly. I I agree with you on much of that. First of all, I thought one of the most amazing things was they own 0 Bitcoin.
Right.
That's quite extraordinary. So they were not in any way Bitcoin centric. They were basically a shitcoin casino,
Yeah.
right? And what they did is they provided a market for people to buy and sell all of these shitcoins, which really have which 99.9% of them have no value and no utility. And one of the things that I hope people understand or get out of this as people kind of do the autopsy on this is that there's Bitcoin, which is this very, very unique. I don't even know what you want to call it. You can call it a very unique asset. It's unlike anything the world has ever seen. And the way that Bitcoin was created, I don't think can ever be duplicated again. And what that means is that Bitcoin did not have a central issuing authority. Everyone that ever mined Bitcoin had to use energy and proof of work to to get that Bitcoin. They just couldn't change a number on their computer and go from 1 Bitcoin to a billion Bitcoins like you
Hmm.
can with any of these garbage coins. So we've been talking about, I don't know, we've been talking about the fact that of the 20,000 other coins that are out there, none of them are Bitcoin. There's an argument to be made that Ethereum has some utility. I don't want to get into that. There's some argument to be made that some of the other coins have some utility, but we're talking about less than 10, maybe even less than 5 besides Bitcoin. And when you look at this, there's nothing that even comes close to emulating or duplicating what Bitcoin is.
Yeah, and I think one thing to illustrate that is if this platform had been built on Bitcoin rather than FTT, this never could have possibly happened. It's just
Exactly.
impossible.
hmm Impossible because, and that's something that I think that is worthwhile. I think there are a couple lessons that people get out of here. One of the lessons is understanding what proof of work is. People hear proof of work, proof of stake. I'm willing to bet that very, very few people who are not deeply involved in this really understand the difference between proof of work and proof of stake. And so I'll try to explain that now, which is that proof of work means that you have to, I guess, is at its most primary level, proof of work means that you cannot just create an infinite number of something. You have to actually put in the work. So let's not use Bitcoin, which is digital and kind of hard to understand. Let's use gold.
Mhm,
So if you let's say you find out that there's gold, that your house sits on a plot of land that has a lot of gold underneath it, and you decide to try and mine that gold.
mhm.
You have to go get equipment. You start digging in the ground. You have to put out a lot of work to get gold out of the ground. And and everyone who wants to mine gold has to put out a certain amount of work to get it. It's not like it's something that it's not like dew on your lawn in the morning that you come out one morning and there's gold all over your lawn. It's something that you have to work to get. And with Bitcoin, without getting into too many of the details, essentially Bitcoin requires you to use energy, electricity, to create more Bitcoin. And you can only create a certain amount on a certain schedule. You just can't create Bitcoin out of thin air. Every single one of these other tokens that are not proof of work can be created out of thin air. Ethereum used to be proof of work. It has now moved to proof of stake, which means they can create it essentially out of thin air. And
Or
that's
that
what
you yeah, or that alternatively, you can have people who already own a lot of it influence
Mhm.
the consensus that, says that the Ethereum is real. So yeah, it's the big difference there is that you've got a truly neutral platform to create the asset, as opposed to a platform that is, I'm not going to use the word centralized, because that, I think that gets a little
Mm.
too complicated, as to whether Ethereum is centralized or not. But in a proof of stake environment, you're basically emulating, kind of the existing system, where those who hold the majority of the asset have the majority of the influence.
Right, right. So I hope that people take that from it, that they understand that Bitcoin is this unique thing, and that what happened with FTX, where they just created this fake, not a fake token, it's a real token. It just had zero value, and they could create an infinite number of them, and then they could assign it a value, and all of a sudden they say, "Well, look, we've got $15 billion of FTT on our balance sheet." And I think that the other lesson that I would hope that, and by the way, we all knew this collapse was gonna happen in some form or fashion. I think it's kind of funny that in the crypto world, that people always talked about these shit coins, that they have no value and they're all gonna be worth 0. And then when it actually starts to happen, people act like kinda surprised, like, "Oh,
Right.
I can't believe this. What's going on?" And that the major players that were involved, like, my question is, why did CZ even have $500 million of FTT on his balance sheet? Why would you ever want to own that? It's not a real asset of any sort. But, um, but I so so we're seeing, I think, in some ways, the inevitable collapse, and I don't know if we're gonna see the change in perspective that the average person would have. That, like, crypto, a lot of crypto is kind of garbage. But there's this thing that we call Bitcoin that doesn't have the problems of the other crypto. That Bitcoin is unique.
Mhm.
We that Maybe this is a catalyst for that. I don't know.
Well, I
And
think there's risk there that a lot of people don't recognize that difference. And so, you know, one of my concerns is that Bitcoin gets lumped in with these things and is is discarded or dismissed or disparaged, because you've
Mhm,
got all of these other shit coins that drag it down. I think that I'm bullish enough on what I think Bitcoin is, that I think that it kind of goes the other way, where, um, you know, as these things continue to fail and Bitcoin doesn't, it kind of continues to prove the idea that Bitcoin is different.
mhm.
But I think that, that's something that we could absolutely see happen over time, where it becomes there's a stigma attached to the entire industry that really shouldn't be applied to Bitcoin.
Yeah, I think that's going to be applied over the next 6 months. I think we're going to see that applied to Bitcoin. I think that the press that this will receive will try and lump Bitcoin in with it. And I know that you've been in a similar situation to me, that you talking to someone, let's just say this is 6 months ago, you're talking about Bitcoin. They say, "Have you heard of this coin? My friend told me about this." And it's like, maybe I've heard of it, maybe I haven't, doesn't matter. But every time you bring up Bitcoin, not every time, but when you bring up Bitcoin, the people will inevitably refer to some other coin. Well, I heard about this one. Or why don't you do this? Or what about that one? And it's
Or I
like,
really like this one. Yeah.
right, this one is much faster and it has more, uh, uh, like more transactions per second, and it's got bigger blocks or whatever. There's always something to it. So, um, but anyway, I'm hoping that the one thing people realize from this is that Bitcoin is not crypto. It may be kind of lumped in that same category, but they are most certainly not the same. And the other thing I'm hoping that people get from this is when we tell people get your coins, get your Bitcoin off an exchange. Do not keep your Bitcoin on exchange. I don't care what the exchange is. Do not keep your Bitcoin on exchange. If you don't have the keys to your Bitcoin, you don't have Bitcoin. And so many people I've said that to said, you're paranoid. It's not necessary. Why do you have to go so crazy? What's the big deal? What's wrong with keeping it on Coinbase? And
Right.
Coinbase hasn't done anything here, so we don't want it. We're not throwing them under the bus. But why can't I keep it there? I keep my money in Bank of America. It's no different. Yeah, I keep my stocks in Schwab. It's no different. What difference does it make to me if I log into a trusted company and I see my balance there? Why do I need to go and buy this, this hardware wallet? Why do I have to go through this like multi-sig setup and it's complicated? I can't move it that fast and I don't trust myself to do this. I trust myself to have it on a exchange. If I forget my password, they'll help me get back into my account. And and now we see because for the people that had Bitcoin in cold storage and not on an exchange, they're not really affected by this at all. The value of their Bitcoin has gone down because the Bitcoin took a 20% hit or so. But they haven't lost anything. If they had 10 Bitcoin before, they still have 10 Bitcoin. Whereas if you had other money on these exchanges,
Yeah. If you had 10 Bitcoin on FTX, or you thought you had 10 Bitcoin on FTX, according to their bankruptcy filing, you have 0 Bitcoin on FTX.
zero. And you're exactly. So I have I have two questions I wanted to get from you. And one is I'd like to hear your worst case scenario for Bitcoin for this. And I think you kind of alluded to part of that, which is that Bitcoin's going to get lumped in with all this other garbage. And people say, all right, I can't trust this. So what do you think the worst case scenario is, in your opinion?
Well, I, I'm not going to frame it in terms of price,
Mm,
because I don't really think of it that way. But I would say that the worst case is that as a result of the fallout from this, and by the way, the scale of this debacle is it's right up there with some of the biggest frauds in history. I mean,
hmm
we've seen articles comparing it to Lehman Brothers and Enron and Tyco and Madoff, and so this is not insignificant in just the level of historical fraud that we've seen over the years in different financial arenas. So, I don't want to understate how big of a deal this is in terms of how much money has been lost for people here. It's terrible.
hmm
And so I think that if the result of that is that there's some further regulation or restriction placed on crypto, and like I said, if Bitcoin gets lumped into that, then you could see a scenario where, for whatever, you know, political reasons, you see everything kind of getting lumped together in one bucket when Bitcoin should be separate. And so, to me, that's kind of the worst case, is that it continues to make Bitcoin harder to interact with um, on a personal level, and it's regulated to the point where it's being treated differently than it should be, especially relative to these other shit coins. So I think that that's kind of the worst case. I think downside is that if it if it turns out that other exchanges are also upside down in what they say they owe their customers versus what they're actually holding in Bitcoin,
Mhm.
you could see that to be a real problem. But the flip side to that is that if the amount of Bitcoin that is out there is really much less than what we're led to believe it is, that inherently makes the value of what Bitcoin does actually exist much higher. So I think there's some self-regulating aspect to it in that regard, where if if we think that the Bitcoin that's sitting on those exchanges is X, based on what the deposits are for the customers of those exchanges, but the actual Bitcoin that they're holding is less than X. That means that the Bitcoin is actually worth more than the
Mhm.
market thinks it is.
Yeah, I agree. I definitely think there are people that think that there's there's a lot more Bitcoin that people think they own than what's really available. So there's like 19.2 million Bitcoin out there, and I
Mhm.
guarantee there's probably, I'm just guessing, I'm just making up stuff, but that maybe there's $25 million of Bitcoin that people think they own
Collectively, yeah.
collectively, right? And I agree with you that I think one of the biggest downsides, one of the biggest worst things to come out of this is that Bitcoin will be lumped in with all this other garbage, and then they'll want to treat it like it's this other kind of garbage, and that we'll see how that plays out because it's this has already been Bitcoin's already been ruled as a commodity, and it doesn't. These other tokens are essentially unregulated securities, kind
Right.
of
I
like
mean,
penny
Bitcoin
stocks,
clearly doesn't meet the test of being a security.
the Howey test,
Yeah.
right? Uh, but I think it's going to be dragged through the mud quite a bit. And one of my other fears from this is that some of the on ramps and off ramps for Bitcoin will be killed, and you can't stop Bitcoin. I don't. There's always a way, but in for all intents and purposes, you basically can't stop Bitcoin. It's practically impossible. It's designed to be impossible to kill.
Mhm.
And it's proven itself to be basically impossible to kill. And the deeper you go down that rabbit hole and the more you understand what's under the hood, you're like, wow, it's really, really, really hard to kill this thing. Um, Especially when you consider how passionate the people are that are holding it, because like 70% of Bitcoin hasn't moved in over a year. Like,
Right.
so the people are just holding on to it. They're waiting for the world to come around to what they see. But that doesn't mean that in the present time that some of the on ramps and off ramps for Bitcoin won't be that there won't be an effort to shut down or hinder the on ramps and off ramps. I mean, it'd be hard to buy Bitcoin and it'd be harder to use your Bitcoin. And this is something you and I both thought about even before this came up. I know we were at the Bitcoin conference last year. One of our the biggest things we were looking for were on ramps and off ramps.
Mhm.
So then the other question is, give me your most optimistic outlook for what comes from this. Not being silly, but like a realistic optimistic outlook.
Well, I mean, I think it's kind of the converse of what we were just talking about. It's that there is some recognition that Bitcoin is different than all of the rest, and that it actually creates some awareness that there's a difference between a token that you can print out of thin air, um, compared to a token that only gets printed when somebody solves a block and receives a Bitcoin reward, and that gets adjusted to only happen every 10 minutes on average. And people recognize the elegance of that and the value of that in terms of realizing that it is truly scarce. It is real. You can't you can't lend out your Bitcoin without controlling your own keys. And
Mm,
to the extent that people are able to understand that and differentiate it between all of these other pieces of garbage that are out there, that will only help Bitcoin.
Yeah, I think I have a similar optimistic outlook, which is that we knew these things were going to go to zero.
We've been saying it.
We've
Yeah.
been saying it is inevitable, but there is a disconnect when people say, "Oh, these things are all going to go to zero," and then they don't, or you still see them existing, and more and more get added. I think when uh, I think we've seen the number of coins go from in the past 10 years. I think they went from like 10,000 to 20,000. I think it doubled over the past 2 years,
Mm.
and you just always knew that they were worthless. And there's some really interesting interviews with SBF out there where they talked to him about this. And there's this interview from Bloomberg I was listening to earlier today where the guy's like, "That sounds like a Ponzi scheme to me." And that's what it was. They just created something and came up with a kind of a story and essentially assigned it a value and you know profited from it. So I think that, like a lot of things in nature, there are times where it's like a forest. Sometimes you have to have a forest fire for the forest to be healthy. And there are other
Yeah.
things like that in nature. Actually, volcanoes, very interesting. I was reading about Mount St. Helens a few years ago. And when Mount St. Helens erupted, like everything within like a 6 mile, 10 mile, I don't even know what the radius was, it was very large, was completely wiped out.
Yeah.
But that ash that came down is so fertile that in like 10 years after the eruption, things were lush and green. It was beautiful. It really helped the area around it. Apple's famous for this, their concept of creative destruction.
Hmm.
They would pull a port or something off a device and people would lose their minds and then realize it was more elegant. They didn't need it. So we knew that these would have to get flushed. And we knew this idea of like yield farming and that kind of thing would have to get flushed because it was nonsense. So in that way, I think it's something like, a healthy forest fire that clears out the old growth that's in there so the forest can be more healthy. And we knew that this was inevitable. It just, when it happens, it's so sudden. And we've seen a number of things this year, 3 Arrows Capital and Celsius and
Luna.
Luna. And I think a lot of these things are actually connected. And I think we're going to see more contagion from this moving
Mhm.
forward. Uh, and and then I also have to say this, that the SEC is really terrible at their job. They're really terrible. Uh, that I don't know if a lot of people know about this, but 10 years before the Madoff scandal erupted, an employee of Madoff sent the SEC like 20 pages of documentation on how this whole thing was a scam. They listed trades. I mean, they did everything. The SEC ignored it. It also turns out that Madoff was like on this governing body to overlook investors. I mean, but the thing was, like, the SEC claims that they're there to help investors, but they keep failing over and over again. One of the things I think is really kind of nuts is that if I want to take my life savings out and go buy lottery tickets, it's perfectly legal.
Yep.
If I want to take out my life savings and go to Vegas and bet it all or, just gamble it away,
Sure. Put it all on black.
well, I don't know if I could put it all in black. I don't think I'd take that bet, but that's totally legal. But if an investment comes to me and I want, let's just say my net worth is $100,000 and I want to put $5,000, so 5% of my net worth into this investment. For a lot of investments, unless you're an accredited investor, I'm not allowed to invest in it because the SEC is trying to protect me.
Hmm.
So you've got all these shit coins out there that are going to zero. Anyone that looks at it for more than 10 seconds knows they're going to zero. If the SEC looks at it, they know this stuff is all garbage. And they've done nothing to protect the investors. And then Bitcoin applies every Bitcoin. Well, there are a lot of people applying for this Bitcoin spot ETF, not a
Hmm.
futures ETF. And the SEC turned down every single one. So something that would have helped people, they turned down. And then something that's going on right under their nose, and they knew. I don't believe for 1 second that the people that Gary, Gensler did not know. He understands Bitcoin. I watched his whole course.
Hmm.
He understands it, that these other shit coins were going to zero and they were worthless. And nothing out there to warn investors or anything like that. Just let people get wrecked. And that's what they did. They let people get wrecked. They didn't help steer people or help educate people or help guide people to be in a position where they wouldn't lose money. They basically put it out there, let people lose as much money as they wanted to lose. And now we're going to see what they do in response to that. And I don't think it's going to be pretty.
No, I think the pendulum swings far in the other direction, and potentially Bitcoin gets dragged into that. I think the one thing I'll say about that is that, I think Gary Gensler has differentiated Bitcoin from the other coins. Um, so maybe there's some glimmer of hope there that there could be some, some regulation. I mean, these things are by every measure unregulated securities, and
100%.
and so if you have a Securities Exchange Commission whose job is to regulate securities, for them to ignore these assets, and say they're not securities is just completely disingenuous. And while I am generally, um, not in favor of regulation, and certainly not in favor of overregulation, if you're going to regulate something, at least regulate something that is risky and deserves to be regulated.
Agreed. And I know you know this, but there's a Gensler connection to FTX.
There is, yes.
Yeah.
Um,
So,
and that's another thing, and we're not going to get into that because it's
mhm.
a lot of it's speculative. But there's a lot of interesting coincidences between this episode and a lot of what I would call establishment players that hopefully we'll get some answers on as this thing unfolds, or more likely we won't.
Yeah, my point with that is that there's no way he doesn't understand what FTX was selling on their exchange, whether it's the
Right.
US exchange, the one in Bahamas. Gary Gensler taught classes on Bitcoin and blockchain at MIT. He understood that this was a casino
Hmm.
where people were just basically putting money in to gamble on fake tokens. And I don't think that's doing the average person a very good service. As the chairman of the SEC, I think he could have he certainly could have done more to help people and to protect people. And I think the SEC did a horrible job here, and a lot of people got hurt, and a lot of people lost. A lot of regular people lost a lot of money. I've been hearing from people. Uh, just from different places. I've talked to, I've heard from friends and I've heard about what their friends have done. And there are a lot of regular people who have lost a lot of money on this. Just, maybe I heard a story today about a guy, he had 10,000, and he lost his 10,000,
Hmm.
but 10,000 to him is like $1 million to a lot of other people. This was in a lot of ways,
High
this is actually
percentage of his net
high
worth. Yeah,
percentage, right? Yeah. So this was a really big deal. And $10,000 is a lot of money to
sure.
anybody.
Yeah. So you
So
have innocent people that really suffered in this in
and
this
and
whole episode.
and then you see these commercials on TV. You see Tom Brady doing it. I don't have an issue with Tom Brady or Steph Curry or these people. I think this is kind of silly. They're paid spokespeople.
Sure.
You pay them to do something. They say fine. I mean, it's legal. They're not pushing fentanyl or something. But you had like FTX doing this Super Bowl commercial, and there were so many places where the SEC or some other government official could have stepped in and kind of slowed this down a bit, not kind of adding fuel to the fire and letting so many people get hurt.
Hmm.
So we're gonna have to see how this plays out. I think there's so many unknown unknowns. I think that you had a great comment earlier when this week we were talking. You're like, eventually, I think this will be good for Bitcoin, but what isn't? And I think that's accurate, that
Yeah.
almost everything's good for Bitcoin. But the road ahead is going to be, in my opinion, very bumpy.
I'm just gonna keep holding on and keep my Bitcoin off the exchange and assume that the thesis is correct, because I truly believe it is. I think that, this is a it's a monetary innovation that, the world has never seen, and realistically most of the world doesn't realize it or know about it.
Mm-hmm. I have a weird thing, my own proof of work. So I don't mind Bitcoin, but I do think that buying Bitcoin and doing it the right way, following our best practices for Bitcoin, which have really proven to be great advice for people, and we've been shown to be accurate with that. That if people had followed Bitcoin best practices, anyone who followed Bitcoin best practices that we wrote would not be in this position. Impossible,
Yeah.
right? But I do think that there's this own kind of idea of proof of work in just buying Bitcoin, putting it in multi-sig cold storage, and then just holding on because it's going to be a wild ride with a lot of volatility, at least for the near term. And that it takes a certain amount of conviction to do it. And you have to, in some ways, pay your dues. I mean, people are here because they think this is, for a lot of people, that they're going to make a good return on their investment in their Bitcoin,
Hmm.
or that they're hedging against inflation, not the inflation of that we see, but inflation of the money supply, debasement of currency.
Right.
But I think that this journey has its own kind of proof of work built into it. And I hope that doesn't sound silly, but it's like you're going to have to pay, not with your money, but you're going to have to pay with some
With your time and effort. Yeah.
time, effort, but also to be able to stomach all these crazy things that are happening around it, because we really are so early, so early. People don't understand. I think it's been around for 13 years, so it's not that early.
Yeah.
No,
By the
it's
way,
really
when you were talking, it reminded me of a tweet I saw earlier this week from Bitstein on Twitter, which was, and I just pulled it up. All Bitcoin is paper Bitcoin until it has been verified by your own full node.
hmm hmm
And I think that's really good advice, actually, is that if you want to own Bitcoin, you have to hold it in your own custody. You have to run your own node, and you have to take that node and verify that the Bitcoin you think you have is actually yours. And once you do that, it's yours.
agreed.
And if not, it's someone else's.
Although, I could argue that if you buy it from a reputable exchange and you store it in multi-sig, um, you can take a certain leap of faith there without verifying it on your
Well,
node and
fair
be
enough. I
okay
mean,
90,
yeah, I mean, you're talking about if you're using some other, block explorer or some other way to verify your Bitcoin other than your own full node. Sure. Realistically, the risk of that not being real is not that high, but at the same time there's no better way to do it, I guess, is my point. It's not that, not that it's super risky to, just go onto mempool and check your own wallet addresses, but there's an extra layer of comfort that you get by seeing it on a copy of the blockchain that's sitting on a hard drive in your home.
Mhm. And at Bitcoin Butlers, we help people set up what we call a watch-only wallet. So we know a lot of people can't handle the node and some of these things. We actually could set it up for people. They can just look and see what their Bitcoin balance is on the Bitcoin network. They can confirm it with that.
Yep.
All right, Matt, anything else on this?
No, I mean, I guess with that, I'll give the standard uh, plugs on where to find us. Um, Website is btcbutlers.com. Twitter at btcbutlers. You can email us at info@btcbutlers.com. But if you go to our website, we have on the website our best practices guide for Bitcoin owners. The 5 best practices are easy to follow, and if they're not easy for you, then we're happy to help you implement them. And that's to buy your Bitcoin on a reputable exchange, store it in a multi-sig wallet, create an inheritance plan, run your own node, and keep it all up to date. And it's
Mhm.
that simple. And, we can help you do any of those things. And if you have any questions, comments, or inquiries, let us know. Like Michael said at the beginning, if you enjoyed this, like, subscribe, share, and we'll be back next week, hopefully, with some more Bitcoin adoption news.
Hopefully, some more positive news.
Yeah.
All right, Matt. Thank you very much.
All right. Bye.